Hello everybody, welcome back. Let's have a look at Bitcoin and a bit of an overview of the market. Now, just for those who are interested in the bots, I closed my bots yesterday and I sold the base currencies, kept the quote currency, and I sold the Ethereum just because I was pretty confident there was going to be a problem with the market, a bit of downside. Obviously, I'm trying to grow this 1,000 into as much as possible. So we're what, 5 weeks later now. I'm just a little less than half, doubled, and obviously I'm down from yesterday because of the pullback by 1.7%. That's fine. That's like I say, it's to be expected. I knew there was going to be a pullback, but one of my mottos is never be all out, never be all in. I've got this amount locked in, so obviously that's my investment plus 300, and this is what I've got riding, which is the remaining KCS, which was part of my bots. So I'll be looking to basically buy back KCS and maybe Ethereum, when the pullback has finished, or at least shown signs of stabilizing, because unlike the last bot journey that I did, where I did the 1,000 to 50,000 in 4 months, that was in a bull market, and I accumulated in a period where altcoins are very unfashionable and uncool, similar to what it is like now. But we were 2020. I knew what was going to happen in 2021. It was always written in stone, and that's how it managed to. By accumulating all these B&Bs that I did, that's how it worked out so well. This time it's going to work out just the same. It's just over a longer time period. In fact, I'm quite pleased with myself that I've able to double it in five weeks in this current market environment. So I'm just trying to lock in as much profit as I can, because obviously I do want to make a lot of money. I know that it'll take longer than the last time. 1,000 to 50,000 in 4 months. That was pretty special stuff. So maybe my target, not that I'd like to set myself a target, but maybe my target will be 10,000 by Christmas, 100,000 by next Christmas. I'll just keep it going. So that's the plan. And that'll be good. 1,000 to 100,000 in 18 months. That's as impressive in many ways than 1,000 to 50,000 in 4 months in a bull market. Let's just face it. Right, so that's enough of that. Let's have a look at the market. So we're pulling back exactly as expected. I spoke about the altcoin trap 2 days ago, and this is basically what I'm talking about. You can see it happening now. So as we saw the Bitcoin dominance chart, having a nice little bounceroo. The closer we get to 40% dominance, the more likely it is to have a move like this. We saw this move beginning as Bitcoin was rallying. So this move has been going on for over 2 days now, just over 2 days. These are 4-hourly candles. So this is currently it's just about 2 days. Yeah, almost 2 days. So that's fine, because we note it. Like I say, I made that video 2 days ago, and lo and behold, the market is responding in the way that I expected it to. Now, the dominance chart is just a representation of who's outperforming who, and obviously Bitcoin outperforming altcoins over the last 2 days, which is why I was taking profit on those alts into Bitcoin, and blah 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 blah. Anyway, for those of you who subscribe to the channel will have heard it all. I'm just reflecting upon the genius which has taken place. I'm a modest man, but yeah, it's no massive big deal, I would say, because there's still a lot of altcoins out there that do have really good setups, and we are still looking to buy the dip. I'm not convinced that the dip is quite yet taken place. It might feel that way for altcoins, or some of them, which is why, like I say, I made a song and dance about getting out of them a couple of days ago. It's been a decent 6, 7, 8 days worth of trading. Really good for altcoins. But let's reflect on what type of market this is. This is a downwards market, heavily burdened with risk, and so you do have to be careful with it. But I still think there's further upside to, just as I was saying on the video yesterday. So yesterday's video was about how it's actually good. We've got a breakout of a range for Bitcoin. A pullback, yes, is required. Altcoins get slapped in the face much harder than Bitcoin in the form of a pullback. I would expect Bitcoin to maybe pull back by 6% or more from wherever it was yesterday. So this is today's open, so that's yesterday's close. So let's just think about it here. 7% down to the breakout level. So this was a range with an inverse and a traditional cupping handle, but basically it's just a range. And if we were to have broken down from it, any pump would have probably found a resistance around 19,000, which is the support of this range. Just as we've broken out of it now, any pullback you would be looking to see a support on the breakout range, which is around 21,600 or 700, give or take, right? That's supported by obviously the range top. It's also supported by the 21 exponential, which is a decent one on a daily as well. So decent moving averages there of significance, holding it up if we were to come down to there, and I would welcome that. And that to me would be a dip worth attempting to buy. And you could, well, the way I'm choosing to interpret it is that, you know, things like KCS, which have been extra wrecked recently because of the FUD of KuCoin, which in my opinion is kind of stupid. Really, I don't know who started that rumor, but I mean, for me it was a blessing in disguise. Picking up KCS on that FUD is pretty good, and that's partially how I've managed to make so much, you know, almost, well, basically double the bot setup, because, you know, people were running in fear. Oh, KuCoin is going insolvent. Someone told me on Twitter without any substantiating evidence. Oh, okay. That sounds like a buy to me, to be honest with you. So yeah, either way, when it comes to altcoins, you do really only want to be buying the ones with the strong setups, a setup similar to Bitcoin or better. There are lots of other altcoins out there with better setups than Bitcoin itself. So look at those charts and buy those dips based upon their own charts. No altcoin is created equal. But obviously for me, buying KCS is part of my bot trading, you know, journey, so I am going to be buying that, and the way that I'll be buying that isn't particularly based on its own chart, which unfortunately isn't very strong, but that favors altcoin pairs on with bots. That's a good thing. We don't want to see a really strong KCS. We want it to be, you know, a lagger. We want it to be boring. We want it to be sideways, while everything else around it can kind of move up. That's how we accumulate it. You know, the longer it stays down, the better, because that's how I will accumulate the most of them. And it will go, you know, one day it will launch, but the longer it stays down here means the longer, you know, the more bots I can set up with KCS. So anyway, it's good. But when it comes to something like KCS, which doesn't have a particularly good setup, I'll be buying it based on Bitcoin's, you know, response to that 21,006, 21,007, which is all fine. Right, so that is more or less it. The dip, in my opinion, is still in play, and we should allow it to take place to, you know, to its full extent. Traditional markets, as we all know, play a role in the way that Bitcoin is moving, and we were talking about this yesterday. This is Nasdaq on the weekly. This is your 10 exponential on the weekly. It's the first time we've poked our head above it since this little moment where we came up to revisit the Bollinger Band Center, so your 20 weekly. But for the most part, it's been a devastating reaction from the 10 exponential. Big rejection, rejection. No, that's where we broke. But yeah, rejection. So for the most part, like, it is a time to be reasonably concerned. But there is something I should draw your attention to. Oh, it's like that meme. I don't know if you've seen it, where there's a tiny little cross and the smallest green histogram tick, and everybody's going crazy. It is something. It definitely is something. And like I say, I've been positioned in stocks since this candle body. It's all there for you to see on the channel. The everything bounce is what I called it, and it is still playing out. So if we do continue with this upside momentum for Nasdaq, this is the obvious place. 12,890 thereabouts. Basically 21 exponential and the 20 simple moving average. So that could be the precursor to the next big rejection on this, and that could mark the top of the everything bounce. But look, I'm personally quite happy to hold these stocks, you know, for the moment. I'm not willing to let them go negative, but I'm happy to keep holding them. It's been decent so far, and this is just the Nasdaq. Within the Nasdaq, you know, the stocks that I bought are up a lot more than this. But generally, as far as an index is concerned, that's 12.5%. That's not bad. So yeah, everything is working as expected and as planned. And again, the best way to make a trade is to plan it way ahead. You know, I don't know if you guys play chess, but you can't just play chess, you know, like a goldfish, just moving things around. You do have to think several moves ahead. The more moves ahead that you can think of, the better. And that's how, I suppose, this last 6, 7, 8 weeks has been played. You know, planning for it, waiting for it, monitoring commodities and Dixie, and, you know, just sentiment and supports and all this lot. You know, it gets boiled down into some kind of formula to which we take a risk and trade. And it is definitely a risky environment now more than ever. So long story short, Bitcoin waiting for the pullback. Alt's going to pull back to a larger extent. That's fine. Look for the stronger altcoins if you're looking to play altcoins. Buy those dips, but base all dips based around Bitcoin. And Bitcoin, for the moment, as far as I'm concerned, you might have a little bit of a bounce now based on that 4 hourly. But I think the majority of of price action from this candle forward is probably going to come down, and I would very much be interested in buying a dip around 21,600. If you get a wick lower than that to the 21, that's fine. If we start seeing any candle body closures, like any of them, but 4 hourly or above below 21,000, then it's a failed breakout and we'll be coming back down. And just like I said yesterday, there are things outside of this chart which will influence price action. Obviously, the next FOMC meeting, where they discuss the next rate hike, and I have a theory that they're going to go a little harder than normal because inflation continues to run high. Markets responding okay over the last 6 weeks, exactly as expected, and as a result of that, they feel like they could probably give them a big kick in the face. You know what I mean? Kick those stocks in the teeth. They're responding well. They can handle another big boot in the balls, and I think that's what they're going to do. So I would not at all be surprised if we saw a 100 basis point rate hike. And to be fair with you, I would welcome it. You know, inflation hurts more people than a bear market in stocks. And if you play the bear market correctly, like we've been doing on this channel, we don't get hurt either. We still benefit from it. So sort inflation out. Come on, because I'm lucky enough to press buttons for a living. I'm fine. There's a lot of people out there that are not fine. So get that inflation sorted. I welcome higher rate hikes. Just get it sorted. Do it. Just do it. Do what you need to do, for everyone else. And I will be okay, and hopefully you will be okay too, trading these charts, because you know what? At the end of the day, volatility is very much a tradable environment, as we have seen, and we can make the most out of it either way. And the important thing is to get inflation down. So do it. Right, I'll leave it with you there, guys. I hope you have a nice day, and take it easy.